Okay, here on the Aussie dollar, US dollar, we have another double top, okay, because we've been looking at double tops quite a lot recently, and you can look back at the videos to see my exact rules for a double top. But the story here on the daily appears to be that essentially we've hit, a point where the market says it's not going to go any further. Okay, we've hit this point, reverse. We've had a second test, reverse. Okay, so that's good evidence of the existence of a point where the market, certainly at the moment, is saying you're not going to go past. Okay, so we look for counter trend trading opportunities or whatever we might look at. So I want to have a look at what this looks like on the 4-hour, and please stick with me on the video, because at first you might think, why is he doing that? Hang on a minute, so what? Okay, the point will become clear at the end of the video. If we look at what this section, which is why I've marked it with a box, looks like on the 4-hour. The market made a move towards this point. Here's our first test. It's a little bit Messier. It's not quite the, pulls away nice and neatly. So, but we still see the same story. We've tested this area. We've pulled away for a bit, not quite given us beautiful white space, but we've pulled away for a bit and then returned. We've pulled away significantly, returned, and this is the second leg of our double top. In fact, what I think I'm going to do, just to make this a bit clearer, so there's our first test as we look at it on the daily, and there is our second. Okay, so when we go down, we've got, yes, there's our first test, there's our second test. And significantly, the candles on the second test have not closed above the highs of the first test. If they had closed above, okay, if it had closed up here where my pointer is, for example, that would be a good indication of the market saying, no, I'm going past that level after all. So the point is, no significant closure above the high of our first test. The story looks pretty much the same on the 4-hour. Let's go down to the 1-hour. Let's see how this looks differently, okay? Messier again, lots more fluctuation. Okay, so here's our first test. So our highest high is here. Okay, the story looks a little different now on the 1-hour. What looked like a lovely, neat test, retest on the daily, looked very neat on the 4-hour, now starts to look a little bit messy. Not just in the sense that we've got a lot more candles fluctuating all over the place, because this is a 1-hour chart, but significantly, we now have candles on the second test closed above the highest high of the first test. So using our logic of, do we close above? The story now looks very different on the 1-hour. We now have a close beyond. Now, of course, we're looking back in hindsight, and we know that regardless of that close beyond, the market reversed, went in the bearish direction. We know that looking in hindsight. But if we were looking at this candle here that is now closed and having to make decisions, well, the story on the 1-hour looks very different to the story on the nice, much neater story on the 4-hour, and the even neater story on the daily. Okay, so what's the point I'm making here? Right, so a lot of traders wonder, why do we put so much significance to the close? Is the close not just where the price has been trading within this range, but surely the close is simply a snapshot of that particular second, the close of the hour. The story might have looked a bit different if we'd finished at a different point. Now, that is a valid point, okay? And as you can see, when you're on the lower time frames in particular, the candles get a bit messier, and that becomes a bit of a problem. The reason I'm showing you this is because on the daily, 4-hour, the higher time frames, the situation looks a lot neater and avoids a little bit of that mess of, yes, but that's just a snapshot on the hour. So if you had been doing this the other way around and you had been trading on the hourly chart, okay, now this is, the market has been trading, as you can see, way below that price point. It's hit this point and now says, I'm not going to go any higher, and it's done it several times. But let's just imagine, instead of doing that, the price had been up here, traveling bearish direction, had hit this point here, gone off, what looks like a trend that is a bearish trend, now hits here and gives us all the signals of a trend reversal. Okay, now, right, so let's go through that again. If this had been an indication of trending activity, continuous downward bearish movement, a signal like that would now be an indication that you're looking for a completely different trend, that you're now looking for a bullish trend. We've passed this level, we've closed above it, right? And that could lead to a lot of problems of you now looking for bullish trends when the market is still bearish. Okay, so that I've made a bit of a mess of this chart now, I realize, so I'll just get rid of this. So my point here is the criticism of, yes, but the close is just a snapshot on the hourly is valid. But my point of showing you the whole start on the higher time frame is, one of the things you can do when you're on lower time frames is anchor your trading in higher time frames. So if we're looking for, look, we've closed above this level is now not valid, we're now looking for trades in this direction, which because no didn't happen. Okay, but what you can do is you can also check the higher time frame, which the immediate higher time frame here would be the 4 hour, and clearly see we have not had that close. So if you're judging something that isn't necessarily time dependent, like close of a double top, okay, is this a valid double top? Yes, we enter. Okay, in that situation, it's a bit hard luck almost. You can't really wait for perfect information. But if you're judging the orientation of the market, are we trending in a bullish or bearish direction? If you're a trend continuation trader, for example, you can simply use the higher time frame to anchor your trading, right? And you can create a rule which says we will only take trades which align with the direction as indicated by our higher time frame. And that allows you to have a little bit of the best of both worlds here, in that you can trade down here on the hourly and therefore have more opportunities, more candles, more opportunities on the hourly. That is what attracts traders to lower time frames. But you can, instead of having all this uncertainty and messiness to deal with, anchoring in a higher time frame and only taking trending trades which align with the overall higher time frame can save you a little bit from some of the messiness like this that says, no, closed above. And as you can see, it was really, in hindsight, not a great signal because the market didn't significantly push further bullish. The market continued on in the bearish direction.